Hey guys, welcome back to another video. In my last couple of videos, I talked about why I trade option spreads and in particular, why I trade out of the money credit spreads. So, after sort of that tutorial and overview of the option space and credit spreads, I thought I'd give you a real life live example of the types of trades I take and how I take them. So just taking a quick look at the chart here, it's around 10:47 a.m. So market's open. It's already moved up a little bit. As you can see, here's the open and it moved up in sort of a bullish impulse there. Low of the day was around 67.18. So after, we see this bullish type of move, an example of a trade, if we think that the market is going to continue moving higher, is that we could put on a bullish option credit spread. So what would that entail? That would entail selling a put credit spread. So one of the trades that I have on currently, an example I could give you all is, if we think the market is going to continue moving up, and maybe it doesn't move up all the way, maybe it just continues up in this range. An example put credit spread that we could sell to deliver profit would be the 67.15 and the 67.10 put credit spread. So you would sell the 67.15 and you would buy the 67.10 put to cover your risk to the downside. And all that really is a bet that the market will finish above that 67.15 level, which I believe is a good bet here, given that the low during early morning trading was around 67.18. So now I want to go into how you would put on this trade, and you can do this either on your computer or on your phone. So you want to head over to the trade tab on Thinkorswim, and one of the things I want to point out is after you select SPX and go to the options chain for SPX, you also want to click this spread button, and usually it presets to single, which is just regular calls and puts, and you want to change that to vertical. So we're trading vertical option credit spreads here. And again, the strikes we identified for the option that we wanted to go with were 67.15 and 67.10. So we want to scroll down to that pre-selection there. And again, it was also on the put side. So we were selling a put credit spread, which has a bullish bias. So we're going to go to that 67.10, 67.15. And then we have the bid or ask selection. So because we're selling the spread, we always want to click on the bid button. So we'll go ahead and click on that. As you can see, the order pops up. We're just going to go ahead and reduce that to one contract for the sake of the video. And looking at the premium we're going to be credited here, it's around $40 for one contract if the market finishes above that 67.15 mark. So we're going to go ahead and confirm and send that trade for that amount. And we just got filled for that trade. Notification just popped up here on the top left. I think my camera is covering that, but now we have our trade in and we're now in the 67.15, 67.10 put credit spread. So now that we have our position on, we want to go ahead and put some risk management / stop losses into our position to make sure it's taken care of throughout the day and we can step away from the desk or do whatever we need to do. So in order to do that, we're going to go to the same order. So just go to SPX and the options chain. And I like to do this on my phone. So I'm showing you the phone version just so you have the computer and the phone version showing you how to place the order. So we're going to go to the option spread. We're going to click that 67.10, 67.15. Again, it's on the put side and it's in the bid section. So that's the position that we have on. And because we sold that credit spread to open, in order to close it, we're going to have to put in a buy order. So you're just going to click that button and it's going to shift it to a buy order for that same spread. And again, we only had one contract, so we'll go ahead and change the quantity to 1. And like I mentioned in my previous videos, part of my risk management / stop loss for my spread positions is if the market moves and crosses over the short strike, then I'm going to go ahead and close that position because then that short strike is no longer out of the money and it's going to be a losing trade for me. So I'm going to go ahead and put that in the market conditions for the order. This is one of my favorite features of Thinkorswim and Charles Schwab. So like I said, if SPX is at or below 67.15, which is the sold strike of our spread, we're going to go ahead and close that position. So we'll put that market condition in. And then what you want to do is you want to head over to the limit order screen. And where it says MAN, you want to click that drop down and change it to ask or bid. And all that does is put the order at the midpoint of the spread. So we want to erase the plus or minus and make it 0 cents. So when the order is placed, it goes straight to the midpoint. And now if we review the order, we have a order to buy back our spread if the market goes to 67.15, and that order is going to be placed at the midpoint. So we're going to go ahead and send that order in and see what happens at the end of the day. All right, so we're back to check on the market after a long day. As you can see, it's around 9 p.m. After the market, I had to head out and play some tennis, but now I'm back. So we're going to check on how our trade did. So as you can see, the market ended up finishing around 67.53 for the day. And if you remember, our bet for the day was for the market to finish above that 67.15 mark via the put credit spread. And that is going to end up paying that $40 premium that we entered the position for. So, that was just a simple bet we took, and it ended up working out in our favor. So just to do a quick review again of the steps we took to take that successful trade. First, we identified what sort of stance we wanted to take, whether that was bullish or bearish. We chose bullish, so we chose to sell the put credit spread. If we were bearish, it would have been a call credit spread. But for today, we were bullish and we sold the put credit spread. So the second step is to identify what strikes you want to sell. And for me, that was the 67.15 strike. And I like that because early in the morning, price went down to 67.18, but found a bottom there and then continued up. So I felt like that was a safe spot that the market would finish above for the rest of the day. So we identified what structure we're going to use. We identified what strike we're going to use. And then after we entered the position for the premium, we sold that premium and we entered in a closing buy order that was stopped if the market reached our short strike. So if the market were to have gone down to the 67.15 strike, we already had that automatic close order in just to close our position and cut our losses if the market went against us. What that allows us to do is really place in that sold option order, have that stop loss in place, and then we can just go about enjoying our day and, hope that our prediction is right. And if it is, we make money. So I think just the overall setup of the trade, having that automatic stop loss in place really makes this a great strategy to follow.